Crypto Twitter is awash with the rumor of SEC Chairman Gary Gensler resigning from the regulatory agency. Pro-XRP attorney John Deaton commented on the rumors, saying a Gensler resignation. The cryptocurrency world, and notably XRP backers, is in an uproar over a commentary written by Charles Gasparino for the New York Post. Gasparino questioned the judgment made by Judge Lisa Torres on XRP and the firm that uses the currency, Ripple Labs, in his article. The decision in the Securities and Exchange Commission's SEC case against Ripple is at the heart of the debate. According to the SEC, XRP is a security that must be regulated by the agency. However, Ripple maintains that XRP should be seen and used as a currency and not as securities. Contrary to the SEC's accusations, Judge Torres ruled that XRP is not a security and the matter is now closed. Many people now see Bitcoin regulation as something that falls beyond the scope of the SEC. CryptoLaw's founder and attorney, John Deaton, rushed to Twitter to express his approval with Judge Torres' ruling and to talk out his own legal fights with the SEC over the agency's treatment of cryptocurrencies in general and XRP in particular. Deaton blasted the case's atmosphere of tribalism and echo chamber politics, and he blasted the SEC for its asymmetrical approach to various cryptocurrencies. Deaton claims that the SEC's approach to cryptocurrency regulation has been inconsistent, citing the fact that Ethereum, another major cryptocurrency, has been granted a regulatory free pass in the past, while XRP has been subjected to intensive scrutiny. Despite objections alleging the judgment defies the policy reasons underlying the 1934 Securities Act, Deaton praised Judge Torres' finding, saying that she made the proper conclusion. He speaks highly of the judge's background and experience, claiming that the SEC would need more than luck to reverse her ruling on appeal. Meanwhile, attorney and Metal Almond founder James A. Murphy tweeted in response to Gasparino's post, calling out the writer for making baseless accusations against Judge Torres. He supported Judge Torres' decision and said that Gasparino had overlooked an important difference between stocks and cryptocurrency tokens. Many people who engage in the cryptocurrency market hope to one day amass a fortune. The difference between XRP and Bitcoin is enormous when considering the number of tokens one would need to become a billionaire. Investors who want to become millionaires with XRP should know that doing so requires a substantial outlay of capital. However, because of XRP's lower pricing in comparison to Bitcoin, investors may buy a larger quantity of tokens with a smaller investment. Bitcoin now has a greater value than XRP. With this in mind, would-be multi-millionaires who want to invest in XRP may amass a sizable amount of tokens, making millionaire status a more feasible goal. However, it might take a greater initial investment in Bitcoin to get the same result. However, there are dangers associated with this investment, as there are with any. Cryptocurrency markets are notorious for their volatility and frequent price swings. Before putting their money into any digital asset, investors should proceed with care and do extensive study. The investor's risk tolerance and investing objectives are other important considerations. The best route to financial security for one investor may not work for another. Successfully managing the Bitcoin market also involves thinking about the long term and diversifying one's financial portfolio. On July 13, 2022, Judge Lisa Torres announced her long-awaited decision on the SEC's summary judgment proceedings against Ripple Labs. The 34-page judgment was a triumph for both the SEC and Ripple Labs, implying that certain sales of Ripple's XRP constituted securities, but not others. Proponents of the cryptocurrency sector applauded the decision, which implies that the XRP tokens themselves are not securities. As regulatory pressure builds, this verdict seems to give important support for the young business. The SEC first filed this case against Ripple in December 2020, charging the company and two executives, Christian Larson, co-founder executive chairman of its board, and former CSU, and Bradley Garlinghouse, the company's current COU, with securities law violations, alleging that the group raised more than $1.03 billion through unregistered securities offerings. While this is not the SEC's first complaint against a cryptocurrency startup, it is perhaps the most high-profile file. Ripple's XRP token was the third biggest token in terms of market capitalization at the time of the filing, behind only Bitcoin and Ethereum. Given Ripple's resources, the industry anticipated the business to fight hard. Special conditions. Ripple sold considerable amounts of the XRP token to these businesses and used the proceeds to improve the market for XRP and develop uses for XRP's ledger. Ripple went to tremendous lengths to advertise XRP, and the court identified many instances when the business seemed to link the token's price to the corporation's own efforts. Furthermore, the judge relied on terms in the sale agreements to back up her findings, noting that the buyers agreed to lock up provisions and find that they could not have reasonably expected to be purchasing these tokens for use as currency or other consumptive use, as currency or was, Ripple suggested. Rather, the judge believed that these parties understood the sale of XRP as an investment in Ripple's efforts. The judge looked readily persuaded that the institutional sales satisfied all four prongs of the Howey test, that the sales formed an unregistered security, and that the sales constituted an unregistered security, and found in favor of the SEC's summary judgment request. Judge Torres, on the other side, found in favor of Ripple in the programmatic sales case. Ripple merely sold a part of its XRP holdings in simple bid-ask transactions across a number of exchanges for these sales. Ripple had no idea who the purchasers were, and the buyers had no idea they were buying tokens from Ripple. This information was crucial in the judge's decision. In contrast to the institutional buyers, who were aware that they were purchasing from Ripple and were ultimately investing in Ripple's future efforts, the programmatic buyers were unaware of who the seller was and so could not have been investing directly in Ripple's future endeavors. The judge reasoned that the purchasers may be purchasing the XRP coin for a variety of reasons unrelated to Ripple, including just buying based on general cryptocurrency market dynamics. According to the SEC's own filings, many programmatic buyers were entirely unaware of Ripple's existence. Given the divide, Judge Torres' order implies that the XRP coin is not a security. Following the verdict, the majority of the main cryptocurrency exchanges reintroduced the token for trade on their systems. The United States Securities and Exchange Commission's SEC decision to appeal the Ripple case has many in the crypto world scratching their heads. Nikolash Du, a CoinDesk journalist, gives light on the case's complexity, while Mr. Huber, a significant player in the crypto community, offers insights into the court ruling's significance. Despite the legal difficulties, Ripple continues to aggressively sell XRP, with considerable monthly sales gains compared to prior years. But what does this signify for XRP's prospects in the future, and how does it relate to the cryptocurrency's turbulent history? According to D, both crypto attorneys and fans are doubting the SEC's choice to appeal the Ripple case. The action has contributed to the continuing legal complication regarding Ripple's coin status. Quite a few crypto lawyers are even saying that the decision itself doesn't really make a lot of sense, Day said. Mr. Huber jumped in, remarking that, despite the contentious appeal, the court verdict revealed a silver lining. XRP was not declared a security. Market participants were relieved by this clarification. Despite the legal wrangling, Ripple has continued to aggressively sell XRP. Surprisingly, the firm has sold a remarkable 2.22 billion XRP since the beginning of 2023, a huge rise over the previous year's 200 million monthly sales. Mr. Huber informed XRP aficionados that, contrary to their fears, these big purchases were absorbed by a different population. XRP outperformed the market despite a significant amount of sales, which is impressive. Back in 2017, XRP holders were on a wild journey with incredible highs and gut-wrenching lows. The launch of Ripple's escrow feature resulted in a 400x increase in the value of XRP, only to be followed by a stunning 60 drop the following day. This was only the start of a series of erratic fluctuations that left investors on edge. Investors who were able to precisely time in their deals enjoyed excellent returns, with XRP soaring by a whopping 1,200 by the end of 2017. However, because of the market's extraordinary volatility, it was critical to have a plan in place to safeguard gains and weather the storm. Only those who invested for short-term gains would have reaped the benefits. Unfortunately, the majority of traders lack a plan. Following Judge Torres' favorable verdict, the XRP price has been steadily rising, enabling the cryptocurrency to clinch its place among the world's top 4 biggest cryptocurrencies. Despite recent accomplishments, economists caution that the current rising trend may be fleeting. Market indicators are reflecting a pessimistic attitude, indicating that XRP has a difficult road ahead.